All right, so Dan Stefels here with Royal LePage Compass Estates, here with a good friend and one of our professional colleagues that we're excited about doing these series with. So Derek Cole is our mortgage broker we use for all of our clients whenever we need either traditional financing or some creative problem solving to get people into their homes. So welcome here, Derek. We're excited to have you.
Yeah, I appreciate it. It's good to be here.
So talk to us a little bit of background about yourself and maybe what's got you started in this whole mortgage game.
Okay, well, so I recently started into mortgages roughly just early COVID, right? I am with Dominion Lending Centers, Canuck Mortgage Group. The brokerage itself is based out of Woodbridge. I'm an agent in Niagara, working in Niagara. So I've been in Niagara 10 years. I got a beautiful wife, 4 kids, and I'm kind of just living the Niagara dream, really. Mortgage-wise, I've always been interested in real estate. It's something that, as a homeowner, right? As a homeowner and somebody who everybody talks about the realtor side, and that's when they look at real estate, they think realtor.
Yeah.
But there's a very distinct part of real estate that is the mortgage that a lot of people, when they go to a new home, they walk in, they look at the foundation, they look at this, they look at that, or at least I do anyway, right? And you look at ways that you possibly could be missing something, but then the mortgages are overlooked completely. The penalties, all that, it's a side thought. So for me, getting into that, learning more about it, it was very intriguing to me. And, the idea of being a self-employed individual, taking control of my situation, especially with COVID, not knowing, a lot of people, they lost their jobs, whatever. So for me, that is ultimately what got me into it. I love it, love helping people. It's been great. Yeah.
Perfect.
Great.
So I think when a lot of folks look at mortgages, and I think you're right, and I show houses all day, every day. You're right. We look at the houses and it's an afterthought thinking about, how are we going to finance this thing? And I think one of the challenges that all of us have is money is this kind of taboo topic, right? So I know whenever we have to refinance our mortgage, or we have to get a new mortgage, or we're buying an investment property, whatever, it's every time we sit down and we're like, okay, so Dan, here's all the stuff we need. It's kind of one of these, you get a little protective, right? Because, everybody has this perception that what they want to give to the world about how successful they are. But when you're sitting down with a mortgage broker and you're sitting down with a lender, it's like you got to open the kimono all the way up. Like there's no more secrets, right? If you've got outstanding child support payments, or if you're overdrawn on your credit cards, or all this stuff, it all comes out. Yeah. So there's got to be a rapport that gets built and a trust that's built between yourself and somebody who's looking to apply for a mortgage pretty quickly, right?
It is. I think it takes a certain personality to be in mortgages, right? Because you want to feel that you're comfortable, and you also want to feel that you're able to trust, the person that you're working with. So for me, that's, it's actually quite hard to establish that over the phone and whatnot, but it is almost a necessary part of it now with our busy lives, right? Most people, you're at work, you're here like that. Mortgages aren't sexy, right? Nobody wants to talk about mortgages. It's a complete afterthought. And it's kind of one of those, I'm going to look at homes and then, I got to get a mortgage. And people just run to wherever they know and whatever they've heard and whoever advertises the most. And they don't put any thought into, and naturally, because again, you don't want to talk about it. It's I don't know, we'll compare it to a colonoscopy, but it is literally like you are exposing yourself, right? You're on the table. We see all your financial history. So you got to be from a place of non-judgment, of patience, of understanding. And it's not even just so much about getting the mortgage. It's about educating people, which is probably the biggest part of it, is helping, and I don't want to use the term education in a derogatory form where it's like people need to be smarter about it. It's my job to be smarter about it, but it's also my job to help you understand where you are, where you're going, and think of it in terms of what you're signing. 5 years, we need to know your 5-year plan. 2 years, we need to know your 2-year plan, right?
All right, so the financial world has been all over the place, right? Mortgage rates have been sky high. They're talking about another mortgage rate increase. Talk to me a little bit about how that impacts your profession and a bunch of the fluctuation, the uncertainty. How does it impact your profession? And then how does that also then impact our clients?
Well, I think for me, with the qualification process, a lot of people are struggling to get mortgages, so directly that impacts the whole market. If you can't qualify to buy the home that you want to buy, or people having to take a step back because of the rate, the problems with qualification, it's not that people can't necessarily afford the house. It's that they can't afford the qualification process, right? So as a mortgage agent, we have different options that we can explore, but they have to be right for you to do that, right? So a lot of people, when they think of a mortgage, they think of going to the bank or whatnot, or if they do know mortgage agents. And when you go to the bank, you have this qualification process. But when that doesn't work, you can't qualify at the bank, or you can't qualify with any other source. Mortgage agents, we have access to other programs and other lending types. So you have B-side, private. The B-side is something a lot of people are scared of if they do know about it, because suddenly fees do become an issue for them potentially. There's broker fees, lender fees. Then, in fact, the interest rate is usually about 1%, maybe a little less higher.
Okay. So I'm gonna stop you on that one, just for all of us that don't live mortgages every day. So we've got kind of the big banks, they have mortgages, and that's what most of us think about, right? I'm going to go to RBC or TD or Meridian or whatever and get a mortgage. When you're talking about B-side lenders, we're talking about what? These are just other finance companies that offer mortgages?
That's okay. So you have multiple ways to get a mortgage. You have the A side, which is lenders such as your big banks, the ones you just mentioned, everybody knows them. Then there's what's called monoline lenders. These are lenders that mortgage agents also have access to. As much as we have access to the main banks, most of them, we also have access to these monoline lenders. These monoline lenders are A banks that you can't walk in and take cash out. You can't use their ATM. Everything is done online. They're massively funded banks. Some of the lenders, some of them are in fact some of the bigger banks that are in the brokerage space without directly being in the brokerage space. So maybe this one is funded by TD, or this one is funded by BMO, or this one, you know what I mean?
So are we talking about President's Choice? Are we talking about Tangerine? Are we talking about that?
No, I'm talking like First National, RMG, MCAP.
Okay, so companies we wouldn't necessarily
you would never hear from them. No,
okay.
You would not know. They don't advertise. It's not there, but they are well funded, same rates, and often a little bit more, a little bit better programs, right? Because with the main banks, you're dealing with certain payout penalties, certain structures. So, for example, if you were to run to a main bank and you get a mortgage, a fixed mortgage. Now, this kind of touches a little bit on payout penalties, because there's always a mystery to payout penalties. I find that probably most people get in and sign a mortgage and they actually have no idea what it's going to cost them to get out of the mortgage.
Well, I remember the last one we signed. It's a stack of paper.
Yeah.
Like it's 100 pages long, right? And so until you sit down and actually dig into it all. So, you know what? And forgive me for this one, Derek. I think we need to take a step back.
Sure.
So when we talk about mortgages, right? So obviously a mortgage is the bank owning a big chunk of your house and lending you money for the house. We've got big banks, then we've got these other categories of banks. But when you think about mortgages, we've obviously got fixed and variable. I think everybody knows the difference between fixed and variable. But then we talk about these programs, right? So now we're start talking about, what do you mean when you talk programs? Are we talking about so you mentioned about a buyout amount, right? Or a payout amount. What other stuff are part of that? What would be part of a program? What do we mean when we talk about programs?
Well, some of the programs, some of the people, some of the lenders on different spaces have, again, the A lenders follow all the same criteria for the most part. But the difference between the A lenders that I deal with and some of the main banks, which we also deal with, and depending on the product you're going to, the main banks definitely have their pluses. But I think the biggest difference is the payout penalties, because if you take a fixed with one of the main banks, there's the interest rate they post, and then there's the interest rate that is what you get, right? So they might have a posted 5-year rate of 7%, but they're giving you a discount rate of 5%,
okay.
right? Trying to be competitive.
Okay.
You terminate that mortgage, and suddenly you're paying the interest rate differential. That term is often thrown around and nobody knows what it means, right? The interest rate differential. And it wasn't until I got into mortgages that you start to figure out the significance of this interest rate differential. And in fact, this differential means that when you go out, you're paying based on what was their advertised rate. So you're not paying based on your 5% mortgage that you currently have. You're paying the differential of what they advertised, not what you got. So if I took out a mortgage at 5%, interest rates now, and this is another reason why, not to go on about it, but this is another reason why it's critical people pay attention, because interest rates are at a high right now. Are they going to go up? Possibly a little. Are they going to go down? Eventually. A couple of years. People are speculating, right? When they go down, you're going to want to refinance. That's natural. We're all like that.
Yeah.
Well, if I'm refinancing and the bank can lend this money now at only 3% instead of 5%, well, by rights, you would be paying that 2% for the rest of the term. Plus, you have to factor in now that you're dealing with an initial rate of 7%. So that is, in fact, what you're paying. You're paying 4% on the remainder of your term based using this interest rate differential. If I'm going into too much detail and too deep about it, but it's very significant. That's why you see people with $40,000 penalties and $30,000 penalties when they want to get out of their mortgage because they don't understand, right? They don't understand.
So I want to just dig into this one thing. I want to make sure that I'm clear about this. So bank advertises 7%. I get my rate that I'm able to get with them because of my long-standing relationship is 5%.
Yeah.
If I refinance at 3%, there's a chance that when I pay out this mortgage or I port it or I move it over, that I'm going to have to pay that 4%. And so when I talk about my penalty to get out of this mortgage, it potentially is those 2% chunks, so 4% of the whole amount over the course of the term.
Mm-hmm. But not porting. Porting, you're still keeping with them and taking or whatever. But porting.
If I get out of the mortgage,
if you try and get out of it to refinance at a lower rate, that is exactly what you're stuck with at a minimum.
Okay, so just to pick up on this, and not to belabor the point here. So we've got big banks. They're kind of the tier 1 banks that have these multiple interest rate differentials that you'll pay out if you want to get out of your mortgage and refinance. But you're saying that there's other options that aren't necessarily the big banks that have different.
Yeah, so for a lot of my clients, when it comes to fixed rate, I'm always cautious about a fixed mortgage because for me, as much as you get that cost certainty, you have limited flexibility. So with the lenders that I genuinely, when it comes to fixed, my first thought goes to these other lenders that I was talking about, the monoline ones, because their penalties are strictly based on the interest rate differential of the contract rate that you've signed.
Yeah.
So they don't have some absurd posted rate and then they discount it. It's just whatever rate you get minus whatever rate they can give the money out then, that is your penalty, or 3 months interest. But 3 months interest in a fixed rarely works out. Now, if you're at 3% and the rates have now jumped to 5% and you're trying to remortgage, your penalty would be less because they can give this money out now at a higher rate, right? So that is one of the pluses in dealing and expanding your mind to the mortgage that you can definitely start to see a benefit to.
Perfect. So taking a step out of the weeds, because this is the kind of thing.
We went pretty far down there. We went pretty far.
But this is the kind of thing that, this is what you do for a living, right? And this is the value that you have for somebody who can sit down and explain it to you in layman's terms, not in a huge document, right? So when you have a conversation with one of our clients and we say, hey, so John and Susie want to buy this house, what's the most important thing that they need to know and start initiating a conversation with you?
Well, for me, again, I think for me, it's the education part of the conversation. Like first, there's obviously the feeling comfortable and putting them at ease and knowing that they're looked after, right? Because that's my job. My job is to read the fine print. Your job, when was the last time you read fine print on any, like they give you pages and pages and pages and you know, yeah.
If I trust the person that I'm sitting across the table
That's
from,
right.
I sign the forms.
Yeah, that's right. And you know, sometimes they'll summarize certain things, but you know, you get a lot of things missed. So for me, helping educate the clients is probably one of the best things that I can do to focus on. When I sit down with a client, we talk, and we'll talk for an hour because I want to know everything about you, because that is how it helps me find the right product for you. If I don't ask you questions, tough questions, questions about what your plans are, you know, it's a gross topic, but even asking about how's your marriage?
Yep.
Because this is a big part of this right now. People are blowing up their families, and if that's the right term, I don't know, but they're having issues. They separate, and wham, right away you're starting with this massive hole. So for me, it's not for you to tell me I'm having marriage troubles. It's for you to have the thought, right? That's it. So I need to know everything about you so that when I come to you with a couple options, whether we're talking about 5 years or variable or whatever, you have a very clear understanding of what we're getting into. Because my job as a mortgage agent, like I'm looking after your needs now for the next 5 years, but I look at it also after that. What's after that, right? Let's get that relationship, that trust, that all that stuff, so that we can move forward. And you don't have to re-go through the process every time. You're always going to be submitting new documents, right? But you don't have to try and trust someone again.
Yeah.
And that's hard.
Well, it's interesting you say that. So one of the things that I always do, and for those of you that are watching I've introduced Derek to, my initial part of the conversation is I always say, just be very honest. It's all going to come out anyways. Mm-hmm. So the more that you're able to be upfront with Derek, and the more that you can be, transparent about all the situations, I'm like, I trust him, and usually that trust there's a transferability mm-hmm. that comes with that. Because I think about this one mutual client of ours, and they've got some very complex financial situation. They've got mm-hmm. there's a lot of moving parts, and people that might be out of work and looking for work, and how do we structure all this stuff? Mm-hmm. And I always say, the more honest you can be, the more he's going to be able to help. Because if you only give him part of the information, he's only going to come back with solutions to solve part of the problem, not all of it. Yeah. So the more open and transparent we can be, the better.
Yeah, absolutely. Like lenders, in some cases, the story matters, which I would have never thought that before getting into this. The story does matter. There are lenders, like if you have a flaw in your credit, I just need to be able to explain why that flaw is there. So if you got separated or divorced and you and your wife were apart for 6 months and you fell behind and whatever it is, but you're back together, that matters. That information matters. So being truthful and forthright and all that stuff, it's tough to hide from your credit, right? Yeah. It really is. So if you can explain it and justify, if you're just saying, well, I was, not paying attention to it and whatever, that might not fly as much, right? Because to them, it says something. But if you've got a legit reason why you've had problems, it's very explainable and still doable.
Right.
Yeah.
So talk to me a little bit, Derek. What's the thing you like most about being a mortgage broker?
Well, I think, obviously helping people is, if you're a people person, I enjoy having conversations with people. The satisfaction I get ultimately in getting, a 5-star review or recommended a referral to somebody else, that to me is the top of it. A little bit different, being, like I kind of touched on in the beginning there, being self-employed, having the freedom to work from home or on the road or at Tim Hortons or wherever we are, right? Yeah. That to me is just such a great part of the process. I love seeing people achieve their goals in real estate. So absolutely, just the people, I think generally are what I find to be the most enjoyable about doing it. And the learning. You learn something Always. Every mortgage, you learn something new. There's always stuff. They're changing it all the time. New programs, whatnot. I think we've discussed before, you and I personally, like, for new to Canada or second houses. There's all kinds of programs out there, but people don't know they're there. They're not really advertised, but you got to have the conversation, right? You got to be willing to have that conversation. And as I said, mortgages, not sexy. Nobody talks about them until you absolutely need it.
Yeah. So, just to give you an opportunity to kind of toot your horn here a little bit, what is it that makes you a successful mortgage broker? What makes you good at this job?
I think as far as being successful, you have to be able to, number one, be a people person. People got to feel comfortable with you. They got to feel they can talk to you. I think you also have to be honest. You're almost a little bit vulnerable when you're talking to somebody because they almost need to feel, number one, that you're confident and you have the ability to do what they need. Yeah. And number two, you need to be reassuring and informative to them as well, right?
Yeah. I would also suggest, Derek, and this is something that I talk about a lot with a lot of folks, anything to do with real estate, especially if you're talking primary residence, it can be very emotional, right?
Yeah.
A lot of times these clients of ours are selling a house that they own for many, many years, or they're buying a dream home, or they're downsizing or upsizing, whatever the case may be. And for us, I sell a lot of houses. You do a lot of mortgages. One of the things I think that as kind of third-party professionals that come to the table is we're able to take some of that emotion away from it, right? It's an exciting time. It's sometimes a stressful time, oftentimes a stressful time, but we can help take the emotion away from it. One of the things that I struggle with, and I can only imagine the same for you, is how do we continue to recognize, and every time somebody calls me and it's 8:30 at night and they're freaking out about whatever, it's like, for me, it's one of 8, 10 deals that are happening at once. But for them, this is the most important thing that's happened in the last 5, 7, 10, 15 years.
Yeah.
Right?
Yeah.
So the ability to kind of calm things down again and say, yep, everything's going to be okay. We're going to get this figured out.
Yeah.
That's got to be one of the biggest parts of this.
Oh, it is. I mean, you're dealing with expectations. What can I afford? Can I buy this? Can I purchase this? You got to be real with clients. And that is part of where I would say it's one of the most difficult parts about it, right? Because how do you tell somebody who technically qualifies for something, but that, just so you know, this is going to make you tight, right? Like, what's your quality of life you want? I can qualify you for this. You can afford this, but can you afford this?
Right.
And
do you want to afford it?
Do you want to afford it? Yeah. But then you feel like you're questioning somebody on things they should know. But again, it's one of the tough parts about it. And I think, if we go into the fact of the difference between dealing with a bank and dealing with a mortgage agent, these tough conversations, these are what you're going to have with a mortgage agent. You're going to have the conversation, the tough conversation. I mean, I've dealt with banks previously before I was a mortgage agent, and you go in, you sit down, it's like, what can I afford? This is what you can afford. Okay, but what is this? Oh, it's 5-year fixed or whatever. Like it's not okay. So right now the rates are high. I'm thinking that they're maybe going to go down. Not that my opinion is solid, because it's only just my opinion, but ultimately it's also an expert's view of the situation that most people don't have. So maybe you should consider this. With the main banks, in my experience, I have never had anybody actually talk to me about the market, where they foresee it going, and give me food for thought, right? Yeah. And I think that's one of the biggest differences you'll find in dealing with a mortgage agent versus, let's talk about availability. This as a realtor, right? You're available. This job is
24/7.
Yeah, it really is, because when things are going south, it needs your attention. Doesn't matter if it's 9 at night or 7 in the morning. And, I would think as you, as a realtor, would know when you've got clients that are dealing with the banks, and it's like, okay, well, we need to find out, can they do this? Can they do that? Oh, well, let me call my guy. Do you get a hold of them?
Yeah.
Do you get a call back inside of the business day? Possibly.
Yeah.
Self-employed individual, mortgage agent. It's our job. All we have is the referrals and the clients. And if we don't do our job, we don't have them, right? We still don't have our office. So for me, that is one of the biggest parts of this is the availability that is necessary in real estate, because it needs to be fluid. It needs to be moving. It's, as you know, we go from you can't even look at the house to having times where you've got pre-approvals running again, right?
Yeah.
So
that brings up an interesting point. So one of the things that we like talking to potential clients of ours is I encourage them to talk to us as early in the process as they can. Mm-hmm. So if you're thinking about making a move, my experience is, especially folks who are downsizing, you're typically looking at an 18-month horizon for our clients, where they say, I think we want to do something to actually execute it. Now, first-time home buyers and upsizing is different, but just using that one example, and I say the earlier you can engage with me in the process, the better. So not necessarily every agent is going to look at that same way. A lot of agents are going to say, I want a deal right now. I would rather take a deal further down the road and help navigate through that process. Talk to me a little bit about your kind of ideal scenario. Do you want to be engaged earlier in the process? Do you want to be engaged? So, because typically what happens is we sit down with a client, we look at 8, 10, 15 houses, whatever, and we say, yep, this is the one we want to do. We write up an offer, we get it accepted conditional on financing, and then, hey, here's Derek. Mm-hmm. Is that the best way, or is there a better way to do that?
Well, I mean, I think there's a better way. I mean, obviously for me, I think the more time I have with you before, it is extremely difficult to, hey, I want to buy this house and it's on the market and I want to put in an offer. What can I afford? Right. Like, it's extremely, extremely difficult to actually give somebody a number that's realistic. I don't like throwing numbers out and then having surprises. I want great situations. So for me, I feel you should be talking to a mortgage agent before you actually engage a realtor, because I think by knowing what you can afford, you don't waste any time. We've had the conversations, the tough conversations. We know where you're thinking of going. Then once you've found that house, you can be quick. You can be quick. You can put your offer in, be comfortable with whatever you've got. So for me, I think the mortgage agent is very, if not before, if you're looking for a realtor, you need to be finding somebody to do your mortgage. Yeah. That's the reality, in my opinion, because you will get the best service, the best mortgage for yourself, and you won't feel rushed. You'll feel like you've really thought this out.
Perfect. Okay. So one of the things that I just explain to people when we're going to look at houses, and folks who have pick up a brand new client and they're like, oh yeah, I'm pre-approved. Mm-hmm. Pre-approval means a whole bunch of different things to a whole bunch of different people. Oftentimes what I say to somebody is, they say, oh, I'm pre-approved for $800,000. I say, great. So you got that typically they get it from a bank. Mm-hmm. And I said, so did you submit record of employment and notice of assessment? Mm-hmm. And did you give all your paperwork already? Or did you just, do an online calculator or talk to somebody and say, here's what I have and what I don't have, and tell me what I can afford. Talk to me a little bit about the kind of the levels of pre-approval and what people can be more comfortable with as far as, because you're just talking about knowing what you can afford. How do we get to that point of being, yes, I'm very confident that we can afford this range?
Yeah, I think pre-approvals, so there's a few levels. There's a pre-qualification. Well, I have an app that I often hand out to clients that they can punch in numbers and find out everything on land transfer tax and anything like that. So there's pre-qualification. You can punch in all your numbers and you can find out, boom, you're pre-qualified for this amount. It's doing the best it can, and it's telling you that. Pre-approvals, in order to be properly pre-approved, you need to have passed along. They need to know, are you employed? And actually, technically, when banks do pre-approvals, I don't believe, and don't quote me on this, but I don't believe you've actually gone through the full process. They're pre-approving you based on, this is what you say you earn. Yeah. They have some of your numbers and whatever it is. They can see your debts and whatnot, but they haven't got your letter of employment. They haven't got any of the stuff. You're pre-approved, but ultimately, you could still lose this, because when they actually go into the situation and say, "Oh, well, he only started here 3 months ago," or whatnot, there's still a lot of room for problems, right?
Or debts that you might not think about, that you might not disclose, or child support stuff, or there's all kinds of different things that you might not sit down with the bank teller and say, "Hey, I do have these things." That only comes out later on in the process.
Yeah, it's similar to the post tragedy insurance that you can get with a lot of people. You get a life insurance, but you've been approved to pay. But when you need to claim, that's when they follow up on all the questions, right? It's similar to that.
Right. So here's an interesting question that has not come up a lot, but probably should. And I think it's important that we kind of have all this stuff out in the open. How do you get paid? Where does your income come from?
Yeah, so there's a common misconception with mortgage agents, and I think a lot of calls are not made by people to mortgage agents because they feel that there's going to be a cost to them. I've often wondered, when you hear people talking about debt solutions, is there a charge for that, right?
Yeah.
Mortgage agents are paid directly by the lender. Now, just to clarify this a little bit, we're paid by the lender. So if you were to run into your main bank, Scotiabank, whoever it is, BMO, anything, and you go and you get a mortgage and they approve you, for you to use a mortgage agent, it's no different in the sense that there's no fees. We are paid directly by the lender. So the lender pays us. This does not come at the cost of a worse interest rate for you. The lenders are still competitive that we deal with, but we are compensated a certain amount, a percentage, based on whatever term, how it goes. So we are paid directly by the lender. There's no cost to you. All the services that we provide to you are essentially free. Now, where there can be a cost is if you do not qualify for one of the main banks, right? And now we have to look at alternative financing. Maybe you're looking at investment properties, and maybe you're looking at certain things that are kind of a bit of a stretch, but it's good. In that situation, those lenders have lender fees. It's usually about 1%, and broker fees about 1%. And then, of course, you have just a little bit higher interest rate. So in that situation, there would be a fee, but it's only if you actually get the mortgage. Once everything is disclosed to you, if you're not comfortable with that, then it's fine. We just walk away and we try and find a way to get you what you want the next time, right? It's about preparation for the next time. So, yeah, everybody feels that, how are these guys getting paid? Or, people getting paid, and it's like, no, it's not for you to pay. Right. You only pay if you want to pay, essentially.
Yeah.
So
when and just kind of continuing down that path. So a lot of what we do, because we're 100% commission only salespeople, right? That's what realtors are.
Yeah.
Mortgage agents, it sounds like it's the same thing.
Exact same.
The work that we do with our clients in preparation and kind of, especially from when we're working with you guys doing a purchase a house, there's a bunch of work that we do on a preparation, and if you don't end up getting the house, we don't get paid, right? On the listing side for us, we put out a whole bunch of money in marketing and staging and photography and all these other avenues, and if the house doesn't sell, then we don't get paid, right? Yeah. So there's an investment that we're making and a risk that gets compensated for from a percentage of the sale. Sounds like you guys are the same way. Talk to me a little bit about your interest in investment. So, for us, we're happy to take on pretty well any client. I don't care if you're $10 million investor or $400,000 first-time home buyer. For me, it doesn't matter, because for me, it's all about how do we take a new client, a new relationship, and service them as best we can, right? Talk to me about how you approach the investment related to new clients.
For us, our investment, our main investment is time. I think that as a mortgage agent, I could advertise, right? But what do I advertise as a mortgage agent? With realtors, you guys have the ability to beautiful homes and whatnot, but hey, here's me with Dan. He just took out a $600,000 mortgage. I've got nothing to advertise, and I actually have a problem with some of the advertisements that mortgage agents do, because I don't blame them. It's like, there's, short of us having this conversation and it going wherever, how do we advertise? In my opinion, the only way to advertise is these conversations and word of mouth and referral, because otherwise I'm posting a rate that probably doesn't even relate to most people.
Right.
And it just, I follow a lot of places online, a lot of the bigger brokerages and bigger, that just throw out a rate and it's a 5-year fixed, and I see the comments and I just shake my head. It's like, sign me up. Where do I go on? Oh, can you call me? And it's like, chances are you don't qualify for that. And if you do qualify, you probably don't even want it, because maybe it has some other terms. So for me, my biggest investment in client retention is the time I spend with them. And I'm more than willing to do that, because, it's important to have that relationship and that time. It's not quite the same as what realtors and you guys have to do to get yourselves out there.
Yeah. All right. So tell me, Derek, so what's the most important thing for a mortgage broker to know?
I think there's actually, if I think about most important thing, there's probably two things that I like to focus on. And we've kind of touched a little bit on the one, and that is, in fact, the story, right? Let's talk about the story of the client, what their goals are, where they see themselves, whatnot. The other is, I think, the fine print of that contract. If your mortgage broker and agent isn't putting in the time, and most of us do, not all of us are the same. I can't speak for everybody, but putting in the proper time to review that so that you can explain it clearly so that people understand it. There's terms like, we talked about portability. Not all mortgages are portable, but do people even think about portable until they want to sell their house, right? So these are the questions that the agent is going to have to ask you. Is this something important to you, or your prepayment eligibilities? Arm's length. This is a term, I think a lot of people, who go for those rates that they see that are just the exceptional rates, you got to wonder what's in there that makes this rate so exceptional. Right. And there's terms such as arm's length sale, which essentially means that the mortgage is not refinanceable. So if you sign up for this great 5-year rate and then you decide to move or sell your house for whatever reason, or you want to refinance, not sell your house, because that is actually the point, but if you want to refinance, you can't. You have to sell your home. So you're locked in for 5 years without the ability to refinance, or you just have to sell your home to get out of it.
Wow.
So I think that's why there's a lot of gotchas, and people would just skim over arm's length sale and not think a whole lot about it. But again, this is where I think for us, it's our job to know and help explain to the client.
So it might be a more attractive rate because the bank is de-risking themselves, so they can offer a better rate because they're like, well, they're never refinancing.
That's right. We know that there's a good chance they're going to be stuck with this for 5 years and that great premium that we're getting from it, right?
Talk to me a little bit about the biggest challenge that clients are facing with mortgage brokers today.
I think for me personally, it's getting used to doing things differently, right? Because especially today, Dan, there's so much fraud, there's so much garbage out there, and now suddenly you are opening yourself up to somebody that you've talked to on the phone, right? You've talked to them on the phone and had a conversation, and you're emailing your bank information and whatnot. Being a mortgage agent, it's a much different experience than what you're going to get working with the bank.
Right.
So I think that is probably one of the biggest challenges clients face, is simply just trying to get used to the process of doing it differently. And it's a way better process. I mean, we can communicate through Zoom, we can communicate like email. Obviously, I don't condone sending documents through email, just with security and whatnot now.
Right.
But communicating through email just with general stuff. We've got secure portals that we use to upload documents. We prefer everybody uploads that way. But in the end, you could be sitting at work or at home in the evening, and we can be doing this. You don't have to come during business hours to sit with me for an hour.
Right.
And then if you forget to ask me a question,
Yeah.
it's like, oh no, how do I ask him this question, right? So that to me is, I think it's just a different way of doing it, and people have to embrace it. And what they will realize is it's just such a better experience.
Yeah. I think probably the last question. So what really differentiates, what sets mortgage agents apart from other finance professionals?
I think for me is, besides the process, we focus our time, we represent you. That is what we do. So when you walk into the bank and you go to get a mortgage, they work for whatever lender they're for. That is who they work for. For us, we work for you. We're here to help you find what works for you. And that's why I have not talked to any lender before I talk to you. It's like I am trying to hone in on what is going to be the absolute best situation for you. Once I've found that, now I branch out into looking in my different options. And I think that's also what is great about the mortgage agent space is if you were to run into a main bank and you apply for a mortgage and they come to you with a rate, well, I don't like that rate. That's way too high, but this is what they're willing to offer. So now you have to go through the whole process again, right? You got to go to another lender. You take another credit hit. You spend all this time sending them documents, meeting with them. You go to a mortgage agent, you're doing the exact same thing, but once.
Right.
We're establishing everything, we're going through, and it's done, one and done, right? Now I can go to as many lenders as I need to. I start with who I feel is the best, because I don't shop it. We don't shop and what will you give us and whatnot. That's not what we do, and it's not fair to our partners and whatnot. It's simply we find who is the best program for what your needs are, and that is who we focus on. But if they're not interested in playing ball, then we focus on the next. But you would never know it, right? Because it's just a one and done for you. You deal with me and that's it.
Yeah.
So for me, that is definitely the biggest difference in dealing with a mortgage agent is just, it's easy.
Yeah.
It really is easy.
Perfect. Derek,
thanks, Dan.
so much.
All right.
So thanks for watching this segment. Derek, man, there's a lot of complexity here. So what I wanted to do is invite folks to click on the link and have a conversation with us. We're happy to connect you to Derek, and obviously on the links you can connect to Derek directly. Feel free to do that, and hopefully we can continue answering those questions for you.
Absolutely.